What's up YouTube? My name is Uncle Smokey and this is Uncle Smokey Stock Trades. And before I start this video, I would like to say I am not a financial advisor and this is not financial advice. So please take what I say with a grain of salt and do your own DD.
What's going on, guys? We got quite the video today, and let's go ahead and just start cracking into it. So today was actually a really good day. I know we barely finished positive, only up a little less than 1%, but at one point today, we were up almost 5%. And I'm telling you, that was a fantastic feeling to see us test that 236 line. I thought for sure yesterday we were going to be trading sideways or even a little bit more down, especially with the whole Powell thing coming up. But it seems like the overall markets took that in stride. He came out and he was talking about all of the plans and stuff that are going to be going on for the future. It was his confirmation hearing before they deem him, I guess, the next however long he's supposed to be appointed in the office. But also keep in mind we do have CPI data tomorrow, but we'll touch on that here in a little bit. So, overall, after the whole Powell talk, everything really just started bouncing back, including Meta, and it did a really good job. Once it tapped that $2.36 line, it did turn it into a resistance line, as we knew it would, because we traded below it, knowing 236 was going to be a level of support from the torchlight days. So, once it did, it traded just below it sideways for a short amount of time before it got brought back down to that $2.30 mark, and then finishing again just slightly positive on the day. Now, with that being said, overall on the charts over the last 2 days, we have moved into a slight uptrend. This is nothing to freaking write home about yet, but this is great news. As you can see, I have drawn a line from 219 up to well past where we're at now, moving it on into the next couple of days, well, day and a half, I should say. And this is the path I would like to see us stay on. It's not extreme, it's not drastic, but it's a good, steady path back north to start moving us back to a better location. Now, of course, if we start firing and start pushing 10-15% a day, I'm not going to complain about that either, but let's cross that bridge when we get to it. Take a look at the 1 hour chart real quick. I know there's a lot of lines on here. It's a lot of mumbo jumbo, and I really hope you could see through them. So, what we've got is this major downtrend that we have been in, but over the last, call it week and a half, we have been in the upper level of this downtrend, trending between the midline and the top line. We're currently midway in between, and like I said, we have begun an uptrend. The last time we made our way to the top, it was an extreme fast movement. And as I always say, anytime we make an extreme movement up, we are going to correct. And we did. We came back down fast and hard and actually overcorrected. So, and also we had some market hinkiness as well. The market wasn't trading the same either. Always remember, anytime there's a reaction in the market, it's always going to be an overreaction. So, with that being said, let's move on to the 1 day chart and look at the final chart we're going to look at before we get into the really awesome information that has finally come to light. So, we did have a green day today. Look at the MACD. This is what's really important. Our indicators today. Forget about what's up here. We'll take all the lines away so you can see it. All right, so but forget about what's up here. MACD hooking flat yet up. So as you can see, the signal line is moving up. The MACD is moving up, but it's flat with the signal line right now. So we did not move down today. Histogram, basically level. And take a look at the RSI. It's come up. All right. So we're showing positive indicators. Like I said a couple days ago, we were seeing bullish divergence. We still have seen bullish divergence. As a matter of fact, if you could draw a line, I don't know if it'll even let me do that. Doubt it. Yeah, it doesn't let me draw lines down there. Didn't think so. Anyhow, bullish divergence has been happening for quite some time. We made lower lows on the price action, but we did not make lower lows on the RSI. Basically, like I had said, when that happens, that signals the end of a trend and a reversal incoming. And I told you before a few days back that it does not mean it's going to immediately, abruptly start trading in the green. It could take some time for this to actually take into effect. Remember, the bulls are testing the bears right now. They're trying to see how much strength they have left, and they're going to eventually try and push them back into the northerly direction, dropping the bears off. Hopefully, we will then start seeing good buying pressure and an increase in price action. All right, so take a quick look at the indices real quick before we leave all the charting. As you can see, we traded a lot like the overall SPY and Nasdaq today. Overall, if you were to compare our 5-minute charts, we had the George W there first thing in the morning, traded up and then sideways. We only had that little dip there towards the end of the day, and I'd be willing to bet there was a little bit of hedge fund manipulation at the end of the day there, trying to make sure that this thing comes back down to the levels that they wanted at. So as you can see right there, W run. The only thing different is this didn't have the pull down. VIX obviously dropped down today as well, finishing down 5%. Okay, let's move on to the really, really interesting stuff. Here's the next part. This is probably the most important part of this video. Right here. Take a look at what happened today. We got an update from the Nasdaq. Holy hell. 37 million shares shorted. That is as of December 31st. That's only 11 days ago. As of December 31st, there is 37 million shares shorted from the free float. Now, I've also figured out this right here. That is not right. 8.82% is absolutely not right. If we go over here and look at the overview and we scroll down a little bit, it shows that they're showing 249.9 million shares is the free float. And we know that's not true. Insider shares alone dropped that number way off. So we're going to go over that here in just 1 minute. But before we do so, I want to finish covering the Ortex data. This morning, we were showing 85% utilization, 1.97% cost to borrow, 4.37 days to cover. And that's all of the shares that are currently on loan, which is 31.96 million. We'll call it 32 million shares. And they're calling that 12.79% of the free float, which is kind of odd that that is almost 13% of the free float when 37 million is only 8% of the free float, right? Yeah, weird. Again, going to get to that here in a minute. It shows today that they returned about 2.2% of the shares that were lent out for shorting. They could have been shorted shares. They could have been borrowed shares. Now, we do know, and also, how in the hell is this possible if we got this and this? Anyway, we do know that they have a bunch of shares out there on loan, that's nothing, really, a drop in the bucket. 1 million shares returned, but then they borrowed an additional 300,000 shares. Cost to borrow max today was at 4%, which is pretty high overall. And they are showing currently 21.55 million shares. Now, the reason why it's possible is because this is all self-reported information. If they're not reporting it, then Ortex doesn't know. And remember, Ortex only gets reported from 85% of the overall exchanges. So always keep that in mind. These numbers we take with a grain of salt. We just cover them because they're in front of us. And overall, the average length of time shorts have been on loan is currently sitting at just shy of 27 days, at 27.59 days. Sorry, shy of 28 days. All right, now, on to the maths. And we're going to do 2 maths today. Interesting, huh? What is the real short interest percent of the free float? Well, I'm going to give you a very rough estimate. We know we have 281 million shares outstanding from Meta. We know there is 41.5 million insider shares because of Fintel. We also know if we take the 41 million shares from 281 million shares, we're going to get 239 million shares. Well, we'll call it 239 and a half. Now, we also know that there are 205 long institutional owners, and there are 42,380,000 shares that are held long institutionally. But that does not mean that institutions are not lending these shares out. Okay, institutions such as Vanguard, BlackRock, companies like that have the ability to lend shares. market makers, hedge funds, things like that. So we're going to do a subtraction of 20%. I'm going to take 20% of those shares off for toot ownership for shorts. Okay, saying those are all shorts. Now, of course, we're not going to figure in the what might be being lent out into this figure, because right now we're trying to figure out what is the short interest overall. So if we take 20% off of the 42,300,000 shares, that gives us 33.84 million shares. Subtract that from the 239.5 million shares, and that gives you 205,160,000 shares. Now, we also know from Ortex and their recent release, and Fintel did as well, that we have 36, we'll call it 37 million shares short interest. And again, we've come down since then, and we know we've been getting shorted. What's the percentage of that? Well, in order to figure that out, you have to take 36, we'll call it 37 million shares, and divide that by the 205,160,000 shares that we've come up with. And that's going to give you 0.180. Now, you've got to multiply that by 100. That gives you 18%. And again, that is an absolute rough estimate. But according to my damn maths, 18% of the free float is shorted. We are getting damn close to where we were before we shot up to $6.55. And I'm telling you right now, I'll be willing to bet we're right on top of it. Because again, this thing is almost 2 full weeks behind, and we already know that we have been getting brought down ever since. Because this right here is the 31st. We had 2 good days, maybe a little bit of coverage there, and then another beating. Guys, I'm telling you right now, we're probably pushing the 20 to 22% short interest. I would be willing to bet. All right, let's move on to the Fintel data now that we've covered the short interest and get on to the next maths. But before we do that, I want you to watch this quick clip.
My background, when I built this company, I got friends, family, and angel investors invest. Some family offices invest. So we had 150 shareholders by like year 5. So communication was always a key. I mean, I didn't do it on Twitter, but we have now more than 150,000.
170,000.
So that's, the retail investors are very important.
All right, so there's a lot of information inside that little tiny few second clip that you need to pay attention to. And the first and foremost thing I want you to, I hope you heard, was that the retail investors are very important, that they do care about the retail investor. So keep that in mind when you're across the Twitter and you're across all these other things, that the retail investors are very important to MetaMaterials Inc., and they're absolutely dedicated to you guys. And the reason why is because you ultimately are the ones that are helping invest in the company and making it grow. With your money, they grow. Also, the second piece of information you wanted to hear in there was the words angel investors. Angel investors are people who will provide capital or monies for a business or a startup, and usually they'll do that in exchange for a convertible note or some form of ownership in the company, or they don't really expect any kind of payback until there has been the product on the shelves, money being made, revenues have been seen. A good key person that you need to look at as an angel investor would be Tom Welsh and Ann Lambert. Those two are angel investors. They've been there since the get-go, and they're, they've gotten some convertible notes and some shares and stuff like that, that they are able to utilize in lieu of their investment. So with that being said, the third thing that you needed to hear, and I did cover this on last night's video, but I don't think it got heard well enough. This is an extremely important detail. This is the one detail that we have been absolutely missing in the short squeeze equation. Are you ready for it? Listen closely. Get closer. 170,000 investors That is retail investors, guys. That is institutional owners. That is investors. There's now 170,000 investors compared to, at the very beginning, 150 investors. And then later on in the video, Ken did mention that at one point there was like 4,000 investors. When he actually came into the company, there was only about 4,000 investors. And now they're all the way up to 170,000 investors. And that is going to be due to the fact that they have came onto the Nasdaq. They had the merger with Torchlight and all of those things. So, here's more maths. All right, so we're going to use the same exact 281 million shares that we used in the other math that we did. And we're going to still use the same exact 41.5 million insider shares. So that's going to give us 239.5 million shares outstanding. Now, here's where the math is going to get slightly different. Instead of using the 20% that we took out of the institutional shares for short shares, we're going to take away that completely, and we're going to put in 30%. So instead of it being 42 million shares institutionally held, it is only going to be 29.6 million shares institutionally held. And again, we take 30% out of the 42 million for a room of error, because there are institutions out there that they lend out shares. Vanguard, BlackRock, any of the market makers that hold a large position, you can guarantee they're lending out shares or utilizing them in the markets. So we wanted to make sure that we took out a nice big room for error. Now, with that being said, that leaves 209, we'll call it 210 million shares outstanding. Now that we have that number, that is your outstanding shares minus insiders and institutions, that's going to give us an addition, or now we have to take away 37 million shares of short interest, because the Nasdaq just updated. We now know we have 37 million shares out there in short interest that have been shorted into the market. And that has to come off of the outstanding shares because they can't be bought up by retail. They're short. So that gives you a 173 million free float. That's it. 173 million shares available for retail to own. Now, since we now know that there are roughly 170,000 investors, not institutional. There's 170,000 investors. We can take that and divide the 173 by that, and that will give you 1,017 shares per retail holder. I hold almost 5,000 shares by myself. I have enough shares for 5 retail investors average. There are holders out there holding tens of thousands of shares, hundreds of thousands of shares. Individual retail investors holding those kind of shares. I guarantee you, like I said in my last video, this float is locked. We got it all, guys. It's going to explode. And when it does, they've got to cover all of the synthetic shares that they've got out there. There's no way that all of those short positions that are out there are real shares. They have to buy real shares. And I'll be willing to bet that we've been buying fake synthetic shares from these market makers, because there's no way in hell that in the last 3-4 months since we've converted over, that all we've been buying is positive shares, not with this kind of information, because the only way that they've had this 170,000 shareholders is because of the Torchlight merger. They got a count. There was a count done when the switch was made. There's more holders now than there were then. I will be willing to bet that there's way more holders. Whew. All right. So, with that being said, I am very confident that we are on the right track to the short squeeze. And we finally got that missing key, the component we needed to be able to finally figure out where we truly stand in this overall short squeeze scenario. And the game is on, guys. This is a totally squeezable stock. It is going to happen soon. I don't know when. Nobody knows when. But when you look at the indicators, you look at what we've got lining up, you don't need PR for a squeeze. You really don't. Would it help? Sure. It drives the stock north. But what you need is margin calls. You need retail investors to hold. You need retail investors to keep buying. You need options to come into the money. You need buying pressure from the market makers when those options come into the money. Those are the things that you need. But the main thing that you need is a float that's locked up. And we've got it. Whew! All right, guys, let's finish this up now. We're going to get back to the Fintel data, and we're going to get the heck out of here. So, Fintel is currently showing about 6 days to cover, and that is because they're showing a little bit more of an accurate short interest. You'll notice that theirs is a little closer to 15%. Now, again, there's going to be a slight difference between their math and my math, just because of I don't know exactly how much institutional share is institutional ownership is being shorted. So that just gives that a slight different number. I think I'm a little bit closer though, but I don't know. I'm biased when it comes right down to it. All right, so overall today, looks like we've got about 350,000 shares available to be lent from a leading prime brokerage, and that is as of about 9 hours ago. And again, this is updated when they get updated. And it says it was updated 6 minutes ago, but there's been no change according to this in 9 hours. And I kind of tend to believe that a little bit, but not really. Again, it's a reporting thing. Right down here. Here we go. So the Finra total volume today. Overall, our volume was about 4.5 million shares. That is it. Finra came in just under that, and they were 51.5% of that was short volume. Overall, 1 million shares shorted through the Finra. Now, we don't have the data down here yet, but I'm pretty sure that this little site over here that we've been using does. And it does have some of it. Let's hit refresh and see if it has it all. It does not yet have it all, but as of right now, we're currently sitting at 56.76% shorted on the day. And we finished green. We actually had a pretty damn good day overall when it comes right down to it. And then when we start seeing the Nasdaq and all these other things start factoring in, you're going to start to see that that is actually probably a lot higher. We might be up in that 65% range. Don't know yet. All right. So finally, final things we're going to talk about, news of the day. The Fed chair Powell's gone through his confirmation hearing. Now we're just waiting for the overall confirmation. And apparently the market didn't mind what he had to say. Basically saying that he will tighten up the policy when needed, and rate hikes are going to come when they come. And I do think that the market has all of that factored in. We have already accepted the fact that inflation is here, possibly to stay for quite some time, and we know that there's going to be interest rate hikes coming in the near future. And I do think that's why we didn't see a whole lot of reaction from the overall market when all this information started flying. Was it bad? No. Was it good? Nah, it wasn't too bad, in all honesty. I listened to the vast majority of this. Some of it I didn't even understand. They asked him a bunch of questions. He answered a lot of questions, but there was one guest that was on there that I really did truly appreciate, and he did mention something that everybody wants to hear, every retail investor wants to hear, and that's the tightening on Congress trading and their significant others, because there's way too much insider trading happening inside Congress. They have way too much inside knowledge of these companies, especially government and bank companies, that is allowing them to be way too profitable. And they're taking this information home to their loved ones, and their loved ones are making money on it. So I definitely think that legislation needs to be made where Congress people cannot play in the markets. Now, the final thing that we've got coming up is tomorrow we have CPI data. That does come out at 8:30 a.m. I would expect for the markets to react accordingly, but they usually only react for a small amount of time if it's bad, down. Usually they bounce about midday. So if the CPI data comes out down, expect for the markets to react. And of course, when the markets react, all of your underlying stocks will react as well. With that being said, that's all I got for you guys today. Like, subscribe, make sure you do what you got to do to get these videos out to the friends and family that you love. This one is a very important video. Also, if you like my content and you want to get a little bit more information from me, make sure you hit that link in the description below and join the smoke ring. It's $2.99 a month, and with that, you're going to get a bunch of emojis and all that other good stuff, but you're also going to get access to the Discord, and the Discord is making people money like crazy. I've only had it open for a little over a week, and every single play I've called out has ran at least 40%. So As a matter of fact, the one I did give you guys yesterday, I don't know if you watched the video, is ZNGA. It ran 80% in the options chain today, 100% at one point. I cashed out at 80%. I plan on buying more tomorrow. So, with that being said, peace.